Couple things that affect the gold price. Um, well, where do we start? What affects the gold price? China's opening back up. They're a big resource buyer. They buy and stockpile a lot of gold. A lot of countries are stockpiling gold. They don't want to keep their money in American dollars because the dollar is strong, and now the dollar is going to start to weaken when the interest rates come down. Strong dollar is not a good signal for gold. It usually begets a lower gold price because the dollar buys a lot more of a lot of other things. People don't want to spend that strong dollar on gold. They'd rather have a weaker dollar and spend a dollar that's buying less goods on the gold. And we just went from a very, very strong dollar environment in 2022 to a weaker dollar environment in 2023. What that means is just that the Fed is going to lower the interest rates soon, but not for a little while. So for right now, you can make 4% on your cash just sitting in a money market account. For the longest time, you can make 0 or 0.1% on your money. People would just go and buy gold. But when you can make 4% on your cash, people will sit in that at least for a little bit. And that's what they'll do for the first half of this year. Then when the Fed pivots and starts bringing the rates down, people will start to move their money into gold because they can't make so much on their cash anymore. And everyone says to me, why would someone just sit in cash and make 3-4% when the rate of inflation is running at 7 or 8%? Well, the answer is that the expectation is that inflation is going to come down. And inflation standard is anchored at around 3%. So people are like, I'll take 4 or 5% on my money. Yes, my dollar is still eroding away to inflation, but the expectation is that inflation will come back down. And that was a new environment for 2022 where you can make good yield on your cash. Because gold is not an interest producing asset. You don't buy gold and then earn 5 or 6% a year while you wait for the price to go up. So that's why gold didn't shoot through the roof when inflation shot through the roof. But now that China's opening back up and the interest rates are going to start coming back down, you'll see a lot of gold buying going on. And then also we're moving into a recession, so companies are not going to do very well. Recession means people are spending less money, so companies are earning less money. Companies are laying people off, and they will start to bring their prices down. But it's not going to look good for them on the stock exchange. And with the price of their company growing, because they're not growing. A recession, by definition, is slow or no economic growth for 2 quarters in a row. People are going to move that money into an alternative asset like gold. And gold's projection this year is in the 2,500 up to 3,000 range. I've been watching the markets for a long time. I've never seen so many people on the same page. These are not gold bugs who support gold outright. Obviously, those guys are always preaching gold, but even other people who just have a more generalist view are talking about gold. And I think it's something that you should seriously consider. I personally would not recommend anything that I don't have a serious position in myself. Gold is my biggest position. I don't buy gold to make big money. I buy gold to make sure that my money doesn't erode away. I'm more interested in preservation of capital. And then as a short, brief note, platinum and palladium. Platinum has a really good projection this year. Why? Platinum and palladium are used mostly, their biggest use cases, catalytic converters in automobiles. But they're interchangeable. You can use one metal or the other. While everyone was using palladium maybe at one point, I think one of them works better for a diesel engine, one better for gas, but they are interchangeable and you can use both for either. But Russia is the biggest producer of palladium. And the ESG, which is the environmental social governance, as a company, you want to kind of be compliant. And that's why people pulled out of Russia, like Starbucks and I mean a handful of companies when the war started, because they don't want to look as if they're supporting it. People are not buying palladium, Russian-based palladium. They can buy platinum, which comes out of South Africa. And they look a lot better for that. And that's why platinum has gone way past this strong psychological $1,000 number that it's been around for a while. Platinum was at 1060 yesterday. So the outlook for palladium, a little bit rough this year. Platinum, very, very strong. And with China opening back up, they're a big resource user. You're going to start to see a lot of these metals get absorbed. The demand go up. There's just really good use case behind gold for what it's as a financial asset when inflation is high and people are looking to park money. So like all signs point to gold. And then as a backup, platinum as well. I have a big gold position. I keep a small platinum position, tiny palladium position. I'll hold on to what I have. And I'll do silver in its own because silver is an animal all its own. Projections are the strongest for silver this year. But you need to know this stuff. You should buy some of this stuff and have it tucked away so that you have some wealth preserved for later. And I just want to keep it short, but call me if you want more information on this stuff. I think it's fascinating. I hope it is for you guys too. And if not, just some worthy information to help you decide where you should park the money that you've been saving up for the past 15, 20, 30 years. All right, have a good day.